Good morning. This is James Hecker, mortgage advisor, NMLS number 214601. Today is Monday, January 23rd, 2023, and I'm bringing you the regular weekly mortgage rate recap and forecast. But first, I just wanted to say a word. Today is my mom's birthday, and this will be the first birthday that passes of hers that since we've lost her been back in April. So it was a wonderful thing to have her and be her son. And it's tough to lose people, and but my mom, she, I think, had a full life, really a full life. And so if you've experienced grief and loss, my heart goes out to you, my prayers go out to you as well. And there are a lot of resources for us to deal with grief. And if you are struggling and you feel like you need some of those resources, don't know where to find them, don't hesitate to give me a shout out. I'm happy to share. So what's happening in the mortgage market? Well, today, Monday, rates are higher than they were at the beginning of last week, which was basically a 4-month low after rates hit a peak some time ago. And but they've gone up a little bit. And in general, however, we think that the long-term outlook for mortgage rates is good. We're going to have volatility from day to day, from week to week, but and that includes today. Rates are a little bit higher, and I think they're going to be higher this week than they were last. The Feds are going to meet in February, and they're going to raise the discount rate again, but there's talk of them raising the discount rate less than what they have in the past. They raised the discount rate 0.75% 4 times in a row, and then the last meeting in December, they raised it only 0.5%. Still a big chunk, but this meeting in February, it's anticipated that they'll raise the rate only about 0.25%. And what does that mean? Well, that means that what they've been doing, raising interest rates, is having an effect on inflation. It's slowing inflation down. Now, you may not feel that when you go to the grocery store, because boy, are things a lot higher than they had been. But year over year inflation seems to be on a decrease, and month over month as well. So it's just not a decrease as much as it is not as much of an increase. So we're still looking at, I think the last number that I saw was about 5% inflation, but that's off the high of around 9% year over year. So the thing to do is to keep an eye on that and not worry about it. Interest rates are really still in a range that is historically normal. And so if you can afford the payments and a mortgage, what that's doing is the higher interest rates are creating a little bit of a situation where it might be a little easier for a buyer, to get into a home. Excuse me. And home prices are starting to see some pressure downward. Now, not in all markets. There are some areas where we've seen, for the right property, continued multiple offers and the homes selling at over asking price. But some markets are showing as much as 10% decline year over year, and some markets are showing a little bit more than that. The economic forecasts for the year of 2023 is that we will see a very minimal positive appreciation in home prices. So with the rates having come down a little bit, they're still off of the highs. With prices having come down in some markets a little bit, that may be an opportunity that may be fleeting. By this time next year, we may see, or even later this year, prices continuing to increase and making it more competitive to get into a home. So if you want to know more information about how this market would affect you personally, by all means, give me a call at 661-714-2145. I hope you have a wonderful week. Take care.